For a look at the impact of the U.S.-China tariffs on retail, let's welcome Matt Shea, National Retail Federation President and CEO. Matt, always good to speak with you.
Hey, Melissa, good morning.
How are your members thinking about this tariff increase? There was a Bank of America Merrill Lynch note out saying that 25% tariff on apparel, for instance, would cause retailers to raise price by about 2.3% just to maintain gross margins. 2.3% doesn't sound like a lot, but I'm sure to a lot of consumers it could really make a difference in terms of their buying patterns.
Yeah, well, certainly we know that we're operating on very thin margins to begin with in the retail industry, so it's very, very competitive out there. Consumers are still very, very value-oriented. I think, to put it in perspective, there's wide agreement with the president and the administration on the overall objectives. We certainly agree that we need to reset in a very fundamental way with our trading partners in China. But we just have a disagreement on the tactics. And we have a study that just came out in the last week that demonstrates that if we go all the way to 25%, both on the $200 billion, tranche 3, and then on the $325 billion, the final fourth tranche that Kayla alluded to a minute ago, that's got the potential to impact 2 million jobs in the U.S. and cost U.S. families an average of $2,300 a year. So I think there's an incentive for both sides to get a deal, both politically and economically. And at some point, those incentives, those lines are going to intersect. We're not there yet, but we're optimistic and hopeful that in the next few weeks, the parties will come back together and find a deal.
What we've heard from retailers in the past is that they were able to bring in inventory ahead of tariffs going into effect, so they pulled forward a lot of inventory. Matt, where do they stand at this point in terms of where their inventories are and their ability to keep doing that? Because they've got a very limited window at this point.
Yeah, well, you certainly heard, Courtney Reagan had Brian Cornell on a number of times last year, and Brian talked about being able to pull lots of levers. Jim Cramer had Laura Alber on last night of Williams-Sonoma, and she talked about how they'd repositioned some of their workforce over the last year, sort of preparing for the worst. So I think that retailers have done everything they can, and there's been a lot of talk, and this is a longer-term play, about diversifying the supply chain and maybe moving some of the supply capacity in other places. The issue is there's no new China. You can't just go somewhere else and replace China with Vietnam or Cambodia or Thailand or South or Central America. You're talking about replacing the capacity of a fire hose with the capacity of a garden hose. So I think retailers have done everything they can up to now. But when we get to 25% on this final fourth tranche, if we go there, talking to the CEOs I spoke with yesterday, and the end of last week, and even hearing from some this morning, I think it's going to be difficult for any retailer in the country to avoid passing along price increases to consumers if we go that final 25% on that fourth tranche, because there's just not enough leverage and wiggle room left to make that happen.
What if we don't go to the final tranche? What if we only raise from 10 to 25%, which is what is in effect right now, Matt? I mean, are we going to start hearing retailers bring down forecasts, or is that increase in tariffs already factored in large part amongst your base?
Well, again, I think everyone that's out there, and different people have different opportunities based on their own supply chains and what they've done historically, and the size and scale matters. If you're a larger enterprise, you've got greater resources, you've got the ability to maybe work with your vendors or to spread those increases over a broader range, a more diverse set of goods. If you're an independent retailer, and we've heard from many of our small independent retailers that have a single unit, that have 5 or fewer employees, they're the ones that are really disadvantaged, those small businesses, because they don't have the leverage or the relationships with their supply partners. And so if the supply partner passes on a cost increase, there's really nothing for those retailers to do but pass that on. At some point, they can't eat all of those expenses because they become unprofitable. So I think you're going to continue to see people be very creative, both in the near and the long term, and hopeful and optimistic that the economic and the political realities, both for the Chinese and for the U.S., make it possible for us to come back together and get a deal that works for both sides.
Hey, Matt, I have a question. It's a bit of a curveball, basically based on a headline that we've been talking about this morning. I don't know if you saw this news with Apple and the App Store yesterday with the Supreme Court, and this idea of whether it's a monopoly. And Mr. Wonderful is here, and we were discussing the possibility that this lawsuit might open up the possibility that consumers could effectively sue stores and say, effectively, you need to carry something, carry a certain product, or not just carry the product, but the commission doesn't work the way you'd think. Does the Federation have a position on Apple and the App Store?
You know, we haven't talked about that yet. It's happened, you know, obviously just yesterday, the news, or just recently. So our leadership will be together in the next few weeks. It's kind of outside our lane. But there's been a lot.
Matt, not really. What it says is that the retailer doesn't have the right to decide what they stock on their shelves. That is the essence of what this Apple litigation is going to be about. It's no different than a Walmart shelf or a Target shelf or even a small retailer, as you were talking about. This is a big deal, I would think, to your membership.
Yeah, Kevin, you know, I think the difference is that, and we've heard a lot about this with regard to Facebook in the past couple of weeks, particularly since Chris Hughes wrote his op-ed article, and we've heard some political candidates talking about breaking up Facebook. That in the United States, unless we fundamentally restructure antitrust law, it's about whether or not there's any consumer harm. And I don't know that you can demonstrate there's consumer harm if you take this all the way to the nth degree when you talk about the diversity of products that exist both in retailers, stores, on their shelves, in the marketplaces that exist today, the opportunity for alternatives. So, you know, maybe someone could interpret this and take it all the way to saying that a big box or a independent retailer must carry a product or there's consumer harm. But I think given the diversity of retailers that are out there today and the opportunity to access those products, that's a stretch.
Do you think there's a distinction between the digital world of the App Store and the big boxes that you're talking about?
I think there is at the moment, you know, because clearly Apple's got a different sort of a relationship with its customers, right, and the ability to compel that, you know, when we have those phones in our hands, there are things that you can't take off that phone, whether you want to have that app on there or not. And I don't think that's the same thing as whether a retailer carries a product. You can find that product somewhere else. There are clear alternatives to that.
And just so we're all clear, Apple is not a member of the Federation.
Oh, they are a member.
Oh, they are?
They're retailers. They're members. Yeah, we have a very wide, diverse membership.